Okay, morning traders. Let's see who's in. Let me know if you can hear me loud and clear. You know, I get that sudden cough every time I go live. G'day, Jason. How are you, mate? Nick, morning. How are we doing? Bobby, new Bobby Bean. How you going, Bobby? I loved your your little bear. What is it called? GIF. I did use that to post it on Twitter, so loved it, mate. That was cool. All right. So as we know, NASDAQ was beaten down um, on the open. So it was coming in the open. The actual European markets were stronger into the open. Sorry, into the US Open. They were actually doing okay. So they gapped up in the open and then pretty much stood still for most of the session and just chopped around before getting hit hard. Hey, Anthony, before getting hit hard, then they dragged down the Nasdaq, gap down in the open, which is kind of to me. I haven't seen any news. I don't know if it was triggered by anything apart from just just some profit taking. We've got US payrolls out tonight, which I think everyone knows that the labour market's slowing down in the US. So they've got potentially the employment they needed, but well, not needed, but they were going to get with the everything opening back up again. But the problem is it's not near enough, I don't think. And people are starting to look at the employment is not looking good. There's going to be layoffs. There's going to be all sorts of problems, and maybe that's what's triggered the wave of selling. And there's nothing come in the way of stimulus from the government yet, which everyone will be looking for. Looking for that party to continue. The US keep throwing money at the market, keep stimulating it, and keep supporting it, but it hasn't come through. I am expecting wholeheartedly for Trump to be on Twitter prior to the market open, trying to buoy this market, because if this gets a bit of a leg down, a bit of a run on, this might be the move we've been talking about, where it's going to trigger a wave of selling, and it's not going to give you much opportunity to confirm the move, if that makes sense. It's just going to go bang, steaming down. Might have a bit of a slight bounce and then go again. So we'll look at that in a minute. Not saying it is. But the fact that any seller prior has been supported quite well, and it's been, let's say, 100 something points, whereas the Nasdaq was down 4 to 5% last night. Yeah, and that's a massive move. And on the open, it just leads me to believe that not a concerted effort, but it's just everyone in one hit, bang, selling off on the open. And it doesn't take much. Like we said, a couple of stocks get hit, then the whole of Nasdaq's down, dragging the S&P down, and the Dow's just going to be sitting around looking at it going, we're going down too, watching the action. So we'll start off with the intraday stuff. We'll look at that, and then we'll just go and focus on the indices and take a bit of a look at what we could expect, where to look. So this is the Nikkei, open down. We've got the support zone around 23,015. You can see that got hit. That got hit. That was struggling, I think, prior. Oh no, you see the European session has popped up through this resistance zone at 23,450. It's been holding above there, and then it got hit once the US market opened and started to head south. So the Nasdaq gapped down and never looked back. It basically was constant pressure all session. It was just down, 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 down. And of course, that, like I said, the S&P was dragged down. So that's what's triggered this bit of a wave of selling. So all the charts are going to look fairly similar. Big selling pressure because the markets are looking quite positive. Hang Seng had a bit of a sell-off, but it was still, like we were saying yesterday when we were trading, it was stuck in that range. It did gap down through the bottom end of the range in the open, then sort of made its way back and then found some more selling pressure, but it kept getting held up off the support. So and then when Europe opened, that's triggered some more buying. Just the usual tricks coming to the opens. They were buying up, but then for whatever reason, NASDAQ decided to sell off and has dragged all the markets back down with it. So if you go and look at, so that really want to see, this is a half an hour chart, see if they can hold, if we can get some sort of lower high coming to pressure, market down. There's a lot of, you can see these MAs are quite, it's just a cliff. So if they can't hold up here, 21,015, it's going down to 22,714. But I'd be struggling to see. I think it's going to have to put in a lot of work to convince people this could be, it's going to bounce again. Dow's much the same. It's got a zone through 28,130, and it's been held down at 28,405. So if that 405 breaks, we might get a bit of back and fill, and just the usual, bit of support into it. Hey guys, TradingView coming through. Good to see you. So we might fine. If that's going to do its usual trick and start to get lifted or get supported in the thin market, that might just try to support. You might find that it's finding support through the Nikkei, the Aussie market, but we'll see. The Hang Seng could really kill it because that's actually started to break down. So we'll see how that goes. If it chops around here, coming to the Asian or 11:15 open, the Hang Seng, and the Hang Seng starts to get a bit of momentum on the downside, then I'd expect that to lower highs to pressure that down to, well, maybe I wouldn't expect 27,570, but that's potentially on the cards in the next few days. I do not think the market's going to get belted around. I think it was a bit of profit taken coming to the employment data out tonight. It's at 10:30 tonight in the US. You didn't see the US dollar move around too much. It was rallying up until the market started getting hit. Then it went down again. It got sold off, so it gave up a lot of those gains. Gold was fairly well contained as well. Crude sold off, so crude's been coming under pressure. And copper got hit like we expected. So maybe copper's starting to show signs that, yeah, we're extended. So the markets that are linked to what we expect to happen were reacting. Copper was reacting, and it was just chugging away nicely on the upside. Now it got a bit of a hit, so we'll look at that as well, because it's not that trend up has not been broken. It's just that wave of selling, along with a big selling into the share markets, may be what's going to trigger things. But we'll see. It could be the stimulus. So Trump is He's in a meeting now. We're going to talk up stimulus. We're going to talk up something. He's getting something done now so he can release it to market prior to the open. Because if these markets employment data comes out weaker than expected, there could be another sell-off going into the weekend, and that's going to kill people because they've got all weekend to start thinking about it and getting nervous if you haven't sold out. Didn't sell out today, or you didn't take the opportunity to lock away some gains, and you've got all weekend to think about it. It's just going to weigh down I would think, weigh down the open on Monday. Weigh in on open on Monday, if that makes sense. So that's the Hang Seng. Don't forget we've got closes at 5, so it's this red candle here, just coming at support. So all this sort of chopping around is after market, just on the CFD pricing. So I'm not looking at this too much. I'm looking at the futures. So if that market opens and just plows through support, which it looks like it's doing now, but if the futures that go and open and then plow through support at 24,590, I'm just looking for a selling opportunity, really, and see if we can get that move down to 210. I mean, it's a couple of hundred points, but that's next to nothing on the Hang Seng, as we know. When the Hang Seng gets a move, 400 to 500 points is probably about right when it starts to get a bit of a move on. But so 200 points, you can just do in a big swing. So yeah, this is the earlier zone that we were talking about, and you could see. Look, not saying that I was biased down. I was biased down the fact that when it gets up to this high, it didn't quite get there. It didn't quite get there again, but when it took out the lows, it sort of washed them out and then bounced back. So we're getting this flushes and then bouncing back. And this was at midnight. So once it basically, the US Open went down, bang, straight down. So that's going to cause a few issues for the actual index itself, the physical index, when they open at 11:30. They're going to start looking at this going, well, everyone's expecting a sell-off. That's pretty much it. No one expects that a market can continue, say, in the NASDAQ and all the US, just continue to plow into new all-time highs. So they're at new all-time highs. And back at a time when, before the sell-off, employment was a lot better. Everything was just a lot better. The situations were a lot better. Now we've gone to new all-time highs. So anyone that's thinking it's just going to keep running higher is dreaming, in my opinion. And that's why I think that a lot of people have been expecting this. I mean, you're not going to go against the flow. There's a bit of euphoria on the upside through buying. But once you see the market, you wake up and it's down 800 on the Dow, 400 and something on the NASDAQ, everyone's going to start thinking, is this the sell-off that we're expecting? So I think that's going to be, the next thing. If it gets supported tonight and we start to bounce back a lot of that and make back a lot of those losses, then yeah, we could be. It's just a bigger flush than normal. I mean, who knows? So I think there's a lot of things we're going to look at first. We want to see first happen. Now that SPY's just opened, it's gapped down. I would expect a bit of pressure on the ASX on the open, even though you expect it to open down over 100 from the SPY movement. Expect the ASX to open down 100, so potentially back below 6,000. It's around 61.20, I think, at the moment, 61.12. So I would expect that to find some weakness, and I would expect retail, as they do. Anyone that's working, you got to remember the way it works. Retail open, the pros close the market. Now, if the pros go and sell into the close, it's not looking so good. But there's going to be a bit of panic. So a lot of people have woken up with portfolios that are doing well, they're all proud of themselves, and then they see 800 points down the Dow. That's going to trigger a bit of fear. Okay, and so you know that we're going to come under pressure from a lot of orders getting hit on the open, with this a bit of a flush. Whether it's going to be a flush and a bounce, we don't know yet. We have to wait and see. Or whether it's going to be a flush and continue, like the NASDAQ gap down and keep going, whether it's going to be something like that, still, we don't know. There's still a lot of water to go under the bridge if there's going to be a big sell-off. Okay, that's my theory anyway. If you go back and look at the actual sell-off when the market was grinding higher, back to about end of Feb, start of March, it was grinding higher. There was a sudden shock to the downside. Okay, that's caught everyone off guard. And then we had a bit of a bounce, a minor bounce, and that's when the selling really started to kick in. Then you got that bigger extension down, and that's where the panic really started to kick in. We haven't got that. We've got a sudden move down. Doesn't mean anything just yet. If we get a couple of days it continues, then yeah, you're going to start to get worried. So yeah, I expected a bit of selling because a lot of people will be putting their orders in prior to the market open. Sell orders, let's get out. You get that wave of selling on the open, and then see what happens. We'll have to wait and see what happens. Okay, so if we go over to the actual indices, let's just make that a few key little things we're looking at. So this is the S&P. A lot of them are just plowed through that longer term moving average. Okay, so plowed through it, holding below. So it's whether or not what we'd be looking for if we do start to bounce from here and find a bit of support. You want to see what happens back at the MAs. Do we get a lower high? The market goes from sort of that overcooked, we get back to even the zero line, and start to find some more selling pressure. That's what we'd be looking for. If that's more selling pressure, that second wave could get a bit extended because there's a lot of juice. We know that there's a ton of, we're probably about there now. So the fact that we've just popped through, we have to keep an eye on that. It's not any severe. It could be a bit of a trap. Like the market plays traps all the time. There might be a trap. We see people have seen that break and go, that's it, I'm selling, and then it gets soaked up and we bounce back up. We'll wait and see. But at the moment, that leg down is going to cause people to a bit of concern. And we know that there's a lot of fuel on the upside that could be squeezed out. Okay, so that's all we're looking for. Are they going to get squeezed out or are they not? Or are we going to hold this level and start to bounce back up? I don't like the way that it's pressured right down. If you go and look at the NASDAQ, which is going to be the key, this is the hourly chart now. It's, technically it's still in an uptrend. I have to keep changing this. Technically it's still in an uptrend. So the fact that we had it could be a flush. So I don't think there's any need to panic just yet. I mean, a lot of people will be panicking. Everyone's saying 800 points doesn't mean we're going to have a downtrend. It's just the fact that, when you're trading it, say the market's trading at 12,000 on the Dow, 800 points is massive. But when it's trading at 28,000, that's a big difference. It is 2%, but 2% when the market's extended could just be a bit of a flush reset and it goes again. Okay, so there's a lot. I still think there's a lot to be looking at. If we go and look at the NASDAQ will be key. If we start to get a bit of a momentum down, we start to break right down, then that's going to be an issue. I mean, I'd be looking, if you've got individual share portfolios, what I'd be looking at is the actual shares themselves and key levels on those shares. If they start to break down, you might want to know, it's times like this, you've got to know exactly where your risk is, okay? Because we don't know what's going to happen. It could bounce, like I said, it could keep flowing down. So if you don't know where your risk is, you've really got to assess your trading. You've got to assess what you're doing. So it's times like this, I mean, if we go back to the sell-off, oh, that was a bit more contained. If we go back to a daily, it's probably the thing. It's not what I'm looking at. It's probably not the best on the NASDAQ, but you can see market's going up, it just goes down. It's hard to say, oh, we'll wait for a bounce, we'll wait for a shoulder, and then get more confirmation on the downside, and then you're not really getting that until the market's already sold off quite hard. So it could be we get a couple of days down, but if it's going to go, it's going to go hard. So I'll just be, like I said, know exactly where your risk levels are, and you're going to get out. No problem getting out and having to get forced to get back in, but there is a problem when you don't get out and you're sitting on a massive loss. Okay, so just think of it that way. Thank you very much. Aussie, the gold, yeah. Gold is just a bit of a machine. So look at gold. Gold's linked to the US dollar, and the US dollar continues to head south. So we're waiting to see if the US dollar holds a lower high in here and starts to trickle down, but we'll see. Okay, so if, yeah, look, it could do. I haven't traded that for a long time, so I haven't actually done any suggestions on that, but COVID, the crash of the stock market, yeah. It's linked to the US dollar. I mean, everyone says buy gold, it's a safe haven. No, it's not a safe haven because it's moving with the US dollar at the moment. I mean, if this was a safe haven, surely that would have rallied. Gold would have rallied last night. Forget about what the dollar did. It would have rallied because it's 800 points down the Dow. It didn't. Okay, so it's still linked to the US dollar. We're still waiting to see stimulus. So the US gold, US dollar, the currencies got hit. Aussie got hit because the Aussie is well and truly. It's linked to the fortunes of the share market. So that even though the US dollar sold off a bit, which would be supportive of the Aussie, Euro, and Pound, the Aussie kept heading south. It sort of brushed aside any sort of US dollar weakness. But there wasn't a lot of US dollar weakness. It's nothing to rave about. It's just if we start cracking back below 92 on the index, back below 92, yeah, then there's weakness. You know, we start to take out this level at 92.68 and then again at 92.60, then there's going to be weakness, and that's where you're going to get this sell-off, and we'll probably be starting to attack 91.79 on the lows, and that's where you're going to get gold. You would expect gold to be supported by a weaker US dollar, and again, people will be looking at that going, oh, safe haven, but it's not. It's a US dollar move. Expecting maybe some. I don't know about the Aussie, but you'd expect some support in the euro. Anytime the US dollar is going to sell off, there's going to be some currency support into the other pairs, the Aussie, Euro, and Pound. But the Aussie is more linked to what's happening with the equity market as well and commodities. So we might find some support in there if the US dollar does sell off quite hard. Then we might obviously going to find some support in the commodities because they're in terms of US dollars. Like I said, we have to wait and see. So, is there anything else you want to look at quickly? I just want to look at the SPY's heading. Here we go. SPY's, so it's heading south. We can get a bit of a weak open, I expect, on the ASX. So what we'll be doing, if anyone is not on the Discord channel, feel free to send me an email to support@tradesetup.com.au. And then look, it's US dollar based at the moment. I mean, US dollar is the key at the moment. So, and stimulus. The market has been one reason why there's only one area to put funds at the moment in stocks. Okay, so if you're going to go bigger funds, we're talking about bigger money. If you're looking for yield, you're not going to put it into bonds. The bigger funds are not going to want to go into bonds, and there might be some safe haven bond buying. We might get some safer. The thing is, traditionally, you flow into the US dollar as a safe haven because it's backed by the US government and bonds and things. That's only in times of crisis. So we haven't hit a crisis mode. And you can see that the US dollar didn't rally. Okay, gold is a bit of a safe haven, but not when it's US dollar based. The US dollar's thing's been bouncing around. We did get a bit of a run on, but that's when the US dollar was heading south. So now at the moment, US dollars have been linked to the stimulus, to further stimulus, because US dollar weakness, every time they load up on stimulus, they're flooding the market with more US dollars, which is pressuring the US dollar down. Now, if we're running out of that stimulus, which we know that because they haven't come to some sort of agreement on further stimulus, another 2 trillion or something, the US dollar could bounce back, and it's purely because you might have US dollar shorts get squeezed back out of the action. Okay, so if we don't get any stimulus, and I would suspect we need more stimulus, or at least them to come in line with expectations, because if they come out with a package of $500 billion, there's a lot. $500 billion is not what the market's expecting. Okay, so if that is starting to show that the end of the stimulus support into markets, you might see the US dollar have a good bounce. So that's what we're more looking at. And again, if that's the case, then what are equities going to do that's been buoyed on the back of stimulus? You would expect them to get hit. I mean, the party's got to come to an end sooner or later. Nothing goes on forever. So that's the fear. I mean, I didn't expect it to go this high. I didn't expect the S&P to break into new all-time highs. Didn't expect NASDAQ, like I said, yeah. Watch it tonight. I don't know if you're what time zone you're in, but we're in Melbourne, Sydney time. So at 10:30 Sydney time tonight, the US employment data is out, and that's what could bounce around they could push around the US dollar. Because if they come out with less jobs than expected, then that's a sign that the US labor market slowing down. And then if it's slowing down, that's not good for the economy, because the economy is built on jobs, obviously. You don't have increase in jobs and you're still sitting around yeah, non-farm payrolls tonight. So if you're sitting around high unemployment rates, then that's going to, and you can't make back those jobs, that's pressure to me. That's pressure to the economy. That's pressure. And the market's been talking up pressure into the economy for a long time now. It's just that it's not being reflected into the share markets because, like I said, you got 4 or 5 stocks dragging the whole of the share market up, the global share market, Whereas if you go and look at the, what is it? Not the NASDAQ, the Dow, UK. So this is the FTSE. FTSE's not looking strong. The NASDAQ's been going this way. We're getting these bounces, then just selling comes straight back in. Same with the DAX. The DAX is not as strong, not near as strong as, say, the S&P and the Dow. And they're getting dragged up. We all know that. We haven't got that support from Apple, Google, Facebook, and all that, the FANGs into these markets. So it's just showing that, there's a bit of euphoria because the US is not melting down, and people are willing to jump in because they know every market's linked to the US, the fortunes of the US. If they keep going up, there's other markets going to keep being dragged up with it, and so on. But now if they start to melt down, the pressure's going to start to mount. And that's the Euro Stocks 50. I think it's a big 50 stocks in European. That's not strong at all. You've got massive resistance that's come through. And where was that back to? I'm on a 30-minute chart, so let's just go back a bit. See that? So that's the sell. Where are we going? Mouse is just a bit jumpy today. So that's the sell-off. Mouse is getting nervous. Going to be clicking the hell out of it today. Bit of that sell-off there. We haven't got anywhere near it. If you go, that's starting a downtrend. It's starting to wave down. Whether we're going to grind down and bounce, but that's a sell-off. That's on the FTSE. DAX. No one's made it back. DAX got there, probably the closest, and we haven't made it back to the highs, whereas the US has just plowed into new highs, thanks to a couple of stocks. So the global economy is not doing so well. They're not healthy. Whether they can throw more money at it, and whether debt's an actual issue to the US, who knows? When we were talking about it with someone yesterday, I don't know what anyone else's thoughts, but the debt they're adding to the market, it's not physical cash. It's just it's a computer-generated number. So they can keep doing that. And what happens if they just, I don't know how it's going to go, but they could just wipe it off the books. It sounds stupid, but that could be it. I mean, just flooding the market. They keep crediting whatever with dollars to provide the stimulus. It's going to come. They've got a massive debt problem in the US, but I don't know how they're going to handle that. Is what I'm saying, I guess. So the market knows that global economy not doing so crash hot. COVID's still an issue. Growth is not there anymore. Maybe we maxed out, and it's time to lock away some gains. That's could be what's happening, but again, it's not going to happen. We'll have to see if it happens over the next couple of days tonight. What happens in the payrolls tonight? There's going to be a big sell-off into the weekend. Like I said, open Monday, a bit of chaos, or we're going to bounce back tonight. Payrolls might be come in line or slightly better than expected. Who knows? All right, guys, I better call it a day there. Thanks for joining me. On Monday, actually, we've got a normal stream that's at 12:30. I'll let you know if that's on, but at this stage, it's not. I'm not going to be doing that because I'll be doing a talk on Spotty. So if you need that link, send me the email. Otherwise, you can just Google and find Spotty, and that'll be on there at 12:32. It goes for an hour. No problem. So what I was saying, I'll be doing that talk at Spotty on Monday. I think it's at 12 or thereabouts. So I won't be doing the stream if that's the case, but I'm pretty sure that's on. I'm booked in to do that. So if you need that link, just let me know. Otherwise, feel free to join in. And I might, if I'm definitely doing it, I might do a 9:40, just depending on what happens tonight, another 9:40, 15-minute stream or something, just to see what action plays out tonight, really. Dollar index, just want to keep an eye on that one. That 4-hourly doesn't look too crash hot. You can see we're just starting to, potentially peaking out here. So if we start to head south, I want to see if gold can rally. and it's ticking higher. All right, thanks for joining me, guys. We'll speak to you again soon. Have a good day, and anyone that's in the Discord channel, or we'll jump in there. I'll be on there at 11 and just have a bit of chat in about an hour or so, and we'll see if we can get anything off there. See if it's enough a clean sell or a clean buy, or not just choppy action again. All right, guys, enjoy it, and I'll speak to you soon.